Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. Okay, daily chart, and we've been talking about this space between the 9-day and the 20-day, where we've been hanging out for about 4 sessions. You're starting to see at least an attempt by the bears to break down from that range, test the 50-day exponential, do some things that could give us a little more downside directional pricing as we head into the end of the week. It's a pretty important day from the bears' perspective because if they're going to start to expand things to the downside, this is the day where they really need to put in an entire day. It doesn't have to be some trend down, minus 3%, carpet bombing of the bulls that leaves, nothing. That's the bears' problem. Once they get going, they try to get it all done in a day, and then it becomes very easy just to, bing, buy, and we're off to the races for a 30, 50, 100, whatever it is, move back to the upside. Like they really got over the tips of their skis here, and they made them pay for it for a couple of weeks. So hourly chart, and you can see, there's your all-time high. They brought it in for a few days, made a lower high, and it's been successive lower highs and lower lows since. So we got new lows week over week, here versus here. And I'll be interested to see what they can do with the red line here, which is the 50-day. You can see that's a hard break of daily mid-band. I'll be interested to see where do we close today versus the green line there, versus the 20-day simple moving average on the daily chart. Are they going to put a close together against the daily mid-band? And if so, can they turn that into, some downside tomorrow? A situation that is going to work out for the bears after all this consolidation and the hard break. You can retest the area of the breakdown, but you better make yet another lower low after that. Again, this is where the bears struggle. They struggle with consistency. The one thing they've shown this week, though, from the Monday close on, is consistency. Lower highs, lower lows. Lower high, lower low. That's what pullbacks are made out of. So we'll see. You've got volume weighted average price and our proprietary moving average sitting up at 38.80. Daily mid-band is at 82. 5-minute mid-band's at 70. Really, for me, if they can convert 70, they can get back up into 80 to 82 and retest that area. Ideally for the bears, they got to hold that in. You don't want to go all the way back. Hourly mid-band is up at 88.5. You definitely don't want to go all the way back there, because if you do, it sets up a situation where even if this is resistance, it allows this action where you've got support, and if you do that and you take out the Globex high, then we're going back to weekly pivot, and that would be the potential beginnings of a pretty decent bounce. So what do the bears need to do? They need to hold it down. Ideally close below the 50. Certainly close below the 20. And we'll go from there. All right. We open in 35 minutes and we'll see what happens. All right. Everybody have a fantastic day. Be safe. Be healthy. Take care. Trade them well. Come check out the room. Come learn this stuff. Come learn how to be successful in doing this. And I will talk to everybody tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.